Good morning, all FPI members and everyone listening. So this is the update for the week of the 14th of August. That was first recorded on Propulsion Pro on the 11th of August. So let's have a look at what is happening in financial planning. The first thing that is important that you have to know is that Cabinet has approved the appointment of Duncan Pieterse as the new Director General of the National Treasury. That was announced last week, Thursday. Pieterse's most recent role was the head of Asset and Liability Management at the National Treasury, after previously serving as its head of economic policy. He played an instrumental role in a government plan announced in Feb to take on more than half of the struggling state power company Eskom's debt over the next 3 years. So let's hope that he continues the very good work that National Treasury is currently doing in the financial planning space as well. So another thing that is important, and I think that financial planners have to keep their eye on, is that medical schemes have been told by the industry regulator, the Council for Medical Schemes, to keep their contributions for 2024 at 5% or less. Now, this recommendation aligns with the Consumer Price Index projections by the SA Reserve Bank Monetary Policy Committee for 2024. The CMS stressed that only contribution increases that have been approved by the CMS may be implemented by medical schemes. And they issued a circular which indicated that it is evident that most household budgets will remain constrained for the foreseeable future. That leaves consumers in a precarious financial position because of the current macroeconomic conditions like high interest rate, domestic currency issues, surging energy prices, and lack of economic growth. So this 5% will be a reasonable utilization estimate for 2024. The contribution increase can then also include a reasonably assumed utilization factor. The CMS will then evaluate and approve it on the strength of the motivation submitted, but medical schemes are urged to keep it under 5%. Let's see if that actually plays out the way that they see it happening. And then a very interesting article that I came across, and this links to our focus on Women's Day last week, but also on Women's Month. There are quite a few studies that have found that women make better investors than their male counterparts. There was an analysis of 5 million Fidelity accounts over the last 10 years that showed that US women's returns were about 0.5% higher than men's per year. And there was another Berkeley study done which showed an even higher difference of about 1%. Now, it doesn't sound like much, but a 1% extra growth over 25 years is a 25% compounded extra growth in your investment. So it's easy to say things like that and to generalize that women are better investors, but there are some key characteristics that women tend to possess that may account for their outperformance in the end. And some of these are that women are more risk conscious. They have a slower, a more measured, and a less gambler-esque approach to investing. And that generally results in higher returns over the long term. Women also tend to leave their investments alone and not react that much to maybe negative market conditions. So women change their portfolios less often than men, and everybody in investment would know that will probably lead to better outcomes. Women are also better at letting go when they should. And here we're talking about the loss aversion bias. This limits investor success because people hold on to their funds and their shares when they have proven to be not as successful as you probably would have hoped. So women tend to be less prone to loss aversion and therefore are willing to let go when they should. They are also less sure of themselves regarding financial decisions and therefore don't suffer from the overconfidence bias that might not always count in your favor. So they're more likely to listen to their financial planners and financial advisors. And then there is some evidence that women are also less likely to hop onto investing trends. So as an example, Gallup Analytics found in 2021 that 11% of US male investors owned Bitcoin, as opposed to 3% of female investors. And there's also some indication of this in Ponzi schemes, in things like GameStop and other risky assets that you could invest in. So women are less likely to exhibit FOMO, the fear of missing out, which is also another emotional response when making investment decisions. So as a financial planner or advisor, keep this in mind. It's not always the truth, but I think there is some research that indicates that women might make better investors than men. So some interesting facts about women that you did not know. Women blink 19 times per minute compared to 11 for men. Just a little bit of fun that you can use around the braai this weekend. Women spend nearly 1 year of their lives deciding what to wear. That is the absolute truth. And women speak about 20,000 words a day. That is 13,000 more than the average man. My husband will definitely agree with that. Then just 2 things to remember. Our retirement and investment conference is open for registration. That is on the 30th of August, and we will dive very, very deep into the 2-part system and everything surrounding that during this conference. So please book your tickets today if you have not. And then our most exciting convention that we have seen in a long time, 14 and 15 November at the Sandton Convention Centre. Registrations are open. Go have a look at the lineup of speakers. We're bringing in brilliant speakers from both South Africa as well as overseas. And we would love to see you there. Registrations are currently open. Thank you very much and have a wonderful week.